I'm Simon Brown, host of Moneyweb Now. I'm joined today in this Moneyweb Better Investor Conference. I've got Harry Joffe, Head of Legal and Tax Marketing at Discovery Invest. Our conversation is going to be around offshore, not the investing part, sort of the legal part, the tax part. Harry, appreciate your time today. That's the key point. The debate about should we be offshore is solved. The answer is yes. The debate around where we go offshore, we can talk around that. Today we really want to say, now you've got those assets offshore, there's actually a lot which I think a bunch of people haven't thought about, and that is, where do you pay tax? What happens when you pass? How do you leave it to your estate? And those sort of challenges which I think for a lot of people come as a giant surprise after they've externalized money.
I thought you were going to say, Simon, after they passed away.
Well, then too,
like
but
them.
I mean...
Yeah, I mean, the thing is, you always get the situation. Client comes up to you and says, I've got this property in London. What do I do now? Do I need a foreign will in the UK? Do I need a foreign executor in the UK? Do I need to do estate planning there? What's my tax going to be there? And that's at least good because they thought about it. Most people, they just go off and they buy the property in the UK and they don't think about it. And then they die, and then the South African will has to be transplanted into the UK, and you have endless trouble. So I think that's what we're going to talk about today.
Yeah, that's going to be a topic. If you've got questions, you can send us our questions, events@moneyweb.co.za. That would be the email. Or you could use the chat box on the YouTube channel. You can drop it in there. If you're on the social medias, the hashtag is BetterInvestor. So that's, I suppose, the key point. Let's start with wills. Tax is an important component as well, but let's start with that estate process. Your South African will is important. You need to have one. You absolutely do. If I've got offshore assets, do I then always need a will for offshore, but also, I mean, maybe for each jurisdiction?
Yeah, so that's where the fun comes in, because the question is, what asset have you got offshore? So you just got that bank account in London. You wouldn't need a separate will just for that bank account, because that's your South African will could handle. The problem comes in when you start dealing with fixed property. So it's that flat in the UK, or that property in Europe, or that house in America, because there, of course, the foreign law is going to apply. So you've got a South African will, which is going to apply South African law, and now, if you've got a fixed property in that foreign jurisdiction, you've got foreign law applying, there could be a clash or a conflict. That's a legal problem. But there's a practical problem, which is an obvious practical problem. Even if your South African will is applicable and is valid and legal in that foreign jurisdiction, how are you going to get it there? So you'll die in South Africa. The master here will want the original will. They will then wind up your estate here, and then eventually you'll get that original will to the foreign jurisdiction. And that's, of course, time-consuming. You're going to wait a year and a half before you get it there. And then you're going to start the winding up process there and hope your South African will is valid offshore. For example, in Europe, they've got what we call forced heirship. And that runs from Napoleon's days. They're still applying Napoleonic law, which you've got to admire the old fella that his law is still being applied 200 years later. But now forced heirship says you have to leave your assets to your spouse and children in certain percentages, and they differ depending on the jurisdiction. So you've got a South African will leaving your assets to your best friend or the SPCA or some charity. But the foreign authorities won't accept that because their law says it has to go to your spouse and children. And now you've got a conflict of laws and you've got this endless trouble. Apart from the fact of trying to get a South African will translated into French is not so simple. Then you've got different concepts. You've got a usufruct in South Africa, which you do have a usufruct type concept in French law, but it's not exactly the same as South African law. So it gets very, very complicated, and it's far simpler if you've got a fixed property or you've got major assets offshore to have that foreign will. But then it goes into the next issue. Do I need a separate will in each jurisdiction, number one? Mm-hmm. And number two, how am I going to get the foreign will drafted? I just go to my South African lawyer and ask him to draft a will for my French assets.
And they know Napoleon, but they know about the elephants and the Alps. They don't know the law.
Exactly, and they might not know about forced heirship and about all the French terms. And then you start looking at costs. What's it going to cost you to do a foreign will? Do I need a foreign trust? And then all these things start coming out. And again, there's not a simple answer. It's not a one-size-fits-all. So you might say, well, I've got a bank account in the UK. My South African will can do the job there, but it can't help with the flat I've got in London or the house I've got in the south of France. There I need a proper will, and I need proper estate planning. Do I want a foreign trust to own it? Do I want a foreign company to be owned by the foreign trust? Because again, what's going to happen when you die, you're going to have this issue of winding up that foreign estate, the foreign will, the foreign executor, and the foreign distribution. So you need to think that through here. And again, the answer is preferably, if you can afford it, to have separate wills in the foreign jurisdictions.
And the key point, I suppose, and certainly what you've alluded to, is make that plan up front. I mean, it's things, for example, do you want to have it in a company or a trust or a company owned by a trust, etc. Plan it now and find someone who is well versed in this process. To your point, I mean, I got a lovely lawyer, but I'm sure if I asked him to write me a French will, he would be like, I have no clue. I mean, a German,
exactly.
Whatever the case may be. Finding those experts who are proper niche experts in the area of expertise.
Yeah, and I mean, Simon, I think we need to be honest here. We need to be quite elitist. You either can afford the foreign structure or you can't. So, for the average South African, without being negative, I mean, that's me and you. If they've just got some basic investments offshore, now they've got to decide, do I want the expense of a foreign trust or a foreign company or a foreign will? It's not worth it. It eats up your return. And I mean, I've said to you earlier, I'm going to talk quite openly to my book. Obviously, I work for an insurance company. But what we found is a very simple solution. And it doesn't have to be with my company. All the South African insurers offer it, is this offshore endowment wrapper. And what an offshore endowment wrapper is it's obviously an endowment policy, but it's issued through one of our offshore offices. We go through Mauritius. Some of the companies go through the Isle of Man. Some go through Bermuda. It's all through a tax center. And it allows you to wrap unit trusts into this wrapper. So you can have a choice of like 300 different unit trusts, including ETFs, which you put in this endowment policy. And it falls under our law and under foreign law. But what's so neat about it is you nominate this beneficiary. Now, it can be a beneficiary for ownership, which means the policy itself moves over, or can be a beneficiary for proceeds, which is just the cash from the policy moves over. But you nominate that beneficiary or beneficiaries. When you die, the money or the policy pays direct to the beneficiaries, and there's no foreign will needed, there's no foreign executor needed, there's no foreign legal problems to go through. It just pays over. And in that way, you're getting the distribution done at a very effective rate. And it's simple for the average South African. It just takes away that whole layer of foreign estate planning that you'll need to go through.
And it pays to the beneficiary. So in other words, it almost, and there's a legal jargon here which I don't know, but it kind of supersedes your will. Your will sits at one side. The endowment says, in the event of my passing, this is who inherits, this is how they inherit. It's a life policy,
so it doesn't need to be mentioned in the will.
Okay. And that then would hold, so it's not going to hold my property, because my next question was, I get your concern around fixed assets, but what around if I've got ETFs in there, I've got unit trusts or perhaps cash offshore, that then fits, those would then fit within the endowment policy nicely.
Correct. Anything like that can fit in. And now, talking about fixed property, and I've got to talk to you about this case. We had a client a while ago, had this fixed property in the US. Now, he wasn't living in it. Obviously, if you're living in it, you can't do anything. That's your property. But he was just renting it out and using it as an investment. So we said to him, when you die, you need a foreign will, foreign executor, and we'll come to the foreign taxes just now. We haven't even got there.
I know.
The foreign citus taxes. And we said, do you need this? And he said, no, I just want to be exposed to the American property market. So what he did is he sold this American property. Obviously, he paid some CGT because he had made some small gain. Took the money, put it into a foreign endowment wrapper, and he bought an American property ETF. Now, he's still got that same American property exposure, probably better, because now he hasn't just got one property. And he's now in an offshore endowment wrapper, so there's no need for any of that. There's no foreign will, foreign executor, and there's no foreign citus tax, which we'll get to now, because it's not sitting in America.
Yeah.
The endowment policy sits in a tax center.
So that is quite cunning because, and in fact, even locally, I said to a lot of people who want to do the buy for let, I've said, well, that's nice, but you need that critical mass. And I don't want the phone call at 2 o'clock in the morning when the geyser breaks or my tenant absconds with the fittings or something like that. You actually say, well, that's an asset, but we can do you better by just getting into a collective investment scheme ultimately. Gets you diversification, massively reduces risk, and takes the stress of management off your hands.
And take that offshore. You don't want to call from at 2 in the morning that your offshore visa's gone.
New York. Yeah.
And again, it just makes it simpler. And the endowment wrapper, of course, gives you that issue where you can distribute to your family. And what's so nice about the endowment wrapper as well, it falls under the South African Insurance Act, the Long-Term Insurance Act. And if you've got a life insured on, which you would have because it's a life policy, after 3 years, it actually is protected against insolvency. And that's Section 63 of the Long-Term Insurance Act.
Okay.
And that means, that endowment wrapper, it's so simple and it's not hugely expensive. And you've almost got a full estate plan. You've got your insolvency protection. You've got your distribution to your heirs that you want. You've got your investment planning in there. It's just a kind of a one-size-fits-all for the average South African.
And that would be with already offshored money. You get the first $1 million and then sign some paperwork, you've got the next 10 million.
So exactly.
Per individual per year, but that's with your offshore money
It's
already.
using your allowances, either your 1 million or your 10 million or both. I mean, it's using your allowances.
What sort of minimums are we looking at?
So I can talk for us, and I think most of the insurers are the same. It's about 350,000 Rand, which divide by 18.2, you can do the math better than me.
It's not even 20,000 ZAR, not even $20,000 at this point.
Yeah, it's about that. So it's, those are the kind of minimums.
Okay, so and that's not massive. Okay, so that's one way of managing the assets, and I got to say I like it. I'm a big fan of listed assets, your ETFs, your unit trusts, rather than fixed assets. I know some people like property, but I think there's better ways of getting exposure to it. The next part, which perhaps becomes even more complicated, is when you do pass and there is tax implications, there is CITES, there is all sorts of complexities in that space. And it's not a simple process at all.
Right, so I mean, I'm a tax lawyer, so I love CITES tax.
Okay, there we go. Someone has to.
And I love Latin, because we had to do Latin at varsity. So CITES tax really says you pay tax where the asset is. And the US and the UK are big on that. So if you've got, property there, normally it's fixed property, but you can have other assets there. Those assets will be subject to CITES tax there, which is really their death duties. Now, of course, what's so neat about that is their death duty rates are a lot higher than ours. So we complain in South Africa that we're heavily taxed, and we might well be. But when it comes to estate duty, we're actually not. So our estate duty rates are 20% or 25%, depending on the size of your estate. But their rates are 40%. So in the US, I mean, it's a sliding scale, obviously, but you get to 40% quite quickly. And what's so nice about the US is if you're a non-American citizen, they like blatantly discriminate against you. You've got to love the Americans. So as an American citizen, you'll get about $11 million abatement for estate duty. As a non-American, you get a $60,000 abatement.
Oh, wow, okay.
So you're going to get to your 40% quite quickly. Now, the interesting bit comes in. So you're a South African, you die in South Africa, you've got this property in the US, you've got to pay 40% death duties. Where does the dollar cash come from to pay those death duties? Your South African estate hasn't got dollar cash. I'm not even sure if it's allowed to, raise dollar cash as an estate. How's it going to pay the death duties in the US? It's going to have to sell the property to pay the duties, which is, of course, not what you want. So I'm going to talk to you about another wrapper now. I mean, I'm talking my insurance book, but I mean, it does solve the problem. So we've got a product called Dollar Life, which is a life wrapper. I mean, the endowment policy is a life wrapper as well, but that's an investment wrapper with investments in. Our Dollar Life wrapper is a pure offshore life policy. So you pay your premium, you get life cover, disability cover.
Premium paid in dollars or in ZAR?
In dollars.
In dollars.
Using your allowances as well. So using your 1 million or your 10 million, you're getting life cover in dollars, and it pays anywhere you want in the world when you die. Now, that means if you've got a CITES tax exposure of $500,000, you can take this Dollar Life policy for $500,000. When you die, it kicks out dollars, and it can settle your CITES taxes quite easily. Now, it gets a little bit more complicated. And, just to complete the picture, you want a neat structure. So you don't want that dollar policy paying to your spouse, and they take the money and run, and you've still got that CITES tax exposure. So what we've linked onto that is what we call a short-form trust. Now, again, a foreign trust is a very expensive vehicle. We spoiled in South Africa. Our local trust costs you 5,000-6,000 Rand to set up, and then off you go.
Yeah.
If you go to an offshore trust, that's going to cost you $5,000 a year to run. And that's before you phone your trustee and actually ask them to do anything. That's
just the base
entry
rate.
level, $5,000 a year. So that's just unaffordable for most South Africans. So what we've done for our dollar product is a short-form trust, which is an offshore trust set up and running through Mauritius, but it can only be a beneficiary of this dollar product or of our endowment product. So it doesn't hold assets, it's a beneficiary kind of to wrap up assets and receive it. And that trust company does it much cheaper for us because they're not holding assets yet. That will cost the client $450 a year, which again is still a fair amount of money, but it's at least affordable and a lot more affordable than $5,000 plus a year. So then you take this dollar product, you use that offshore short-form trust as a beneficiary with a letter to your trust company, when I die, the proceeds must be used to settle my death duties. And then you've got a very neat structure which is fully funded and fully structured to achieve its aim. And what's so neat as well is that Dollar Life policy unlike a South African life policy, is not estate dutable in South Africa. Because most life insurance is estate dutable in South Africa. This dollar life isn't because it's a non-domestic policy.
And what it ultimately is doing, it's removing complexity, which in itself is quite nice.
Yes.
But it's also it's benefiting your heirs, because ultimately that duty they need to pay, the profits, whatever it might be, is going to hit the estate at some point. And this is kind of plugging that in, which means there's more to be distributed to the heirs. And
they don't have to sell the property at an inopportune time to raise cash to pay the debt duty. So it's a very simple but effective structure, and it's relatively affordable.
If you've got questions, you can send them events@moneyweb.co.za, and of course you can put it in the chat box on the YouTube channel. If you're on the social medias, #BetterInvestor. A question from Rob, and I'm not going to go too much into the details because we could spend days resolving it, but he says tax resident in Cyprus, South African will, offshore investments, US, Singapore, on the Swiss exchange, i.e. a lot of complexity. Submits returns both in South Africa and in Cyprus. He says, do I need an offshore will as well as my SA will? My advice would be yes, but, and the but is, in points like this, and in many cases, we need to chat to the experts as the individuals, because it's also, each of our circumstances is going to be unique. You know, we're talking Napoleonic law, but maybe my apartment's in, I don't know, Austria or Ukraine or something like that.
You're surprised how far Napoleon got. I mean, it shocks me.
Fair point.
None of us are historians, but I tell you, I mean, you can look at a country like Egypt, and it sometimes had a bit of Napoleonic law. So I think the answer as well, Simon, is the viewer raises a very interesting point. You know, what if I'm spread all over?
Yeah.
You know, so I've got the yacht in Spain, I've got the flat in France, I've got something in the UK, I've got something in Singapore.
Ferrari in Monaco.
Exactly. I mean, we know these high net worth clients that we dream about. But it might well be worthwhile then setting up an offshore trust. Because if you think about it, to have 4 separate wills in 4 different jurisdictions, to have 4 different executors when you die in 4 different jurisdictions, 4 different sets of law, it's very complicated. If you set up that offshore trust, now of course you're going to pay the $5,000 a year plus. But at least all your assets can be wrapped into that offshore trust. And then when you die, there's nothing. You know, there's no more complexity. And so that viewer should look at the offshore trust option. Again, understanding that there'll be costs to set it up, costs to move assets into the trust, maybe some common capital gains tax. But if he's not tax resident in South Africa, and he's tax resident in Cyprus, which is a bit of a tax center, there might not be CGT there, and it might be a good time to move the assets into that offshore trust.
I want to get to CGTs in a moment, but I also want to get to the point which I kind of alluded to right up front, which is, and it comes to the point of around structuring your assets. You know, and before we came on air, I was talking about someone I know who's got property in 3 different continents, excluding South Africa, 3 different other continents. And, you know, it sounds great, and they're earning different currencies and the like, but they didn't do it in terms of thinking about the implications around tax and CITES. They didn't do it thinking around estates and all of that sort of thing. And firstly, if you're sort of starting out, is plan accordingly. And secondly, if you find yourself in a position where maybe you've got these different pieces all over, it's simpler to say, hang on, to your example earlier, can we actually step back and simplify this process? Because and I get the excitement of owning stuff all over, but it's adding complexity, which we don't need, particularly around death and taxes.
And the other thing, Simon, people forget, you know, you might have this flat in France, or you might have this investment in the UK, but you forget about the tax back here. Because if you're tax resident in South Africa, there's CITES tax when you die, but there's income tax when you're alive, unfortunately. And you'll have to declare that on your tax return in South Africa, because you're tax resident here, no matter where the asset is in the world, and you're going to have to pay tax here in South Africa. Now, we have clients all the time that have to do this, and think how complex that gets, because you've got rental in pounds, you've got costs in pounds, now you've got to declare that on your tax return in South Africa in rands, so you've got to convert pounds to rands. You know, good luck with the way the rand moves.
Sure.
SARS does put out a document on their website every year for an average exchange rate for the year to try and help everyone, so that's quite useful. But again, it's not simple. Trying to work out the average rate for the year, because it works month on month, and then you've got to work out your costs, which you've got to convert to rands from pounds. If you've got a capital gain, say you've sold shares in a foreign exchange, and now you've got to work out your capital gain, convert that back to rands. That's very, very complicated. And foreign dividends tax, you know, if you've got foreign dividends tax, what's your dividend tax there? Have you got a gross dividend or a net dividend? Trying to report that on your tax return, that is complex. And again, you need foreign experts, and you need local experts to do it on both sides of the sea.
And part of the trick with that is that I've made some money in dollars or euros or sterling, I don't know, Aussie dollars, whatever the case may be. It's offshore money that I've made. SARS wants ZAR back home. I mean, I can repatriate money back, but that kind of defeats the point. And again, you've got that mismatch.
Exactly. So you've got to try, fund your liabilities back here in South Africa. And of course, bringing it back might mean you sell assets, which creates more CGT and more of a tax problem. So again, I'm going to talk to our book, and I love talking about insurance wrappers, but again, it makes your life simpler. If you're in an endowment policy, there's still tax. Don't be fooled. It's not like an endowment policy is tax-free. But in the endowment policy, what is so neat is that tax is paid inside the policy.
Because that was my question. Okay,
so you own this endowment policy, local or offshore, it doesn't actually matter. Mm-hmm. Let's say it's an offshore endowment policy. There's still tax because it's on our balance sheet, but we pay the tax in the fund for you. So you don't even need to report it on your tax return because the tax has been paid in the fund on your behalf. Now that means, again, no rand-dollar conversion, no working out the complex capital gains tax, no working out the dividends tax, because it's all paid for you. It's after-tax investment in effect when it's in your hands. And of course, it also means not only do you not need to report it, but your tax rate is lower, because us insurance companies get a lower tax rate than the individual.
Sure.
So if you're an individual and you're earning taxable income, you're paying 45% at your marginal rate. In the fund, you're only paying 30%. Now there's not normally much income in these funds, but there's always capital gains tax as you switch and as you move. Now the individual capital gains rate at the top end is 18%, but in the fund, if it's owned by an individual, it's only 12%, and that's a big difference. So we pay the CGT on your behalf, and we're only paying at 12% as opposed to 18%. So again, it depends on your wealth, but for the average South African going offshore, going into these endowment wrappers, you're getting the estate planning, you're getting the tax benefits, and you're getting the tax planning. And there's a nice word I always use from my grandmother called tax schlep.
Yeah.
I mean, tax is a big schlep anyway, but offshore tax is a bigger schlep, trying to do all this work and all these calcs. And the other thing, don't forget, which I always talk about, you're invested in a foreign unit trust with a foreign company. It's all very well if it's a South African company, but say it's Templeton or any foreign company. They're not tax residents here, so they're not going to send you a tax form. So you've first of all got to get hold of them, and you're going to say, please send me my dividend tax form for the February 2023 tax year. Then I'll give it to you eventually in dollars. Then you're going to say, please send me a capital gains tax form for the February 2023 tax year. They'll send it to you in dollars. Now you've got to do all the conversions, and you've got to do the calcs, and the foreign dividends you've got to do. But if you're in a foreign endowment wrapper, it's just done for you. And we have to sit and go through the tax schlep on your behalf.
No, that's fine. You're the tax.
And we get paid for it.
You probably love tax. Akbar's asking around wrapper 30% default tax. Correct, we've just discussed that. A question from Emma. Emma, I'll be with your question in just a minute. The endowment policy, if I'm understanding it correctly, is not around income for me so much. This is more around estate planning. Is that a fair comment?
And around tax. So, I mean, the question we got around the default, so it's not really a default tax in the sense that you'd only pay 30% income tax in the fund if you've earned income. Almost all these offshore investments, are they're roll-up funds. So there's no income normally earned. It's always rolled up into the price. And that means you're only going to pay capital gains tax if you switch or if you exit. So it's always going to be normally the 12% CGT.
Gotcha. Emma, you're saying dividend withholding tax on an ETF such as the S&P 500, which are inside a tax-free account. What percent are we charged? I can answer this because I've been down this rabbit hole. So IRS would charge you 30%, but you get some of that kicked back. So you get essentially, you're ultimately paying 15% on the dividend only, and that's if you're holding a JSE-listed S&P 500 ETF in your tax account. It's 15% ultimately. There is no shortcut to it, and if we consider that the dividend yield on the S&P, let's call it 2% because it makes my math easier, it's costing you about 0.3% of the actual value of that investment. So you are giving some money to the IRS, but it's not staggeringly huge amounts, and it's not going to make the biggest difference in our life. I mean, fees matter, and less is always better. But in this case, it's fairly modest, and there are some efficiencies to it. But there's still some tax drag there. Some folks will say they don't want to put offshore products into their tax-free account just to resolve that. Emma, that's a question you're going to have to decide for yourself. Personally, the 0.3, I can live with it. The Americans, they could do with the 0.3 right now. It is around that schlep, and it is around the planning, but it's also, you made a point there, which I'd never thought of before. SA insurer will only pay proceeds to a local bank account, and I'd never thought of it before, and initially I look at that and I think to myself, that's not even the end of the world, but then suddenly a whole bunch of things start to come in, and hence talking around your particular dollar life policy, there's so many sort of neat little problems that it solves.
So let me say, Simon, one of my biggest set of questions that I get, I get lots of questions around, minors as beneficiaries, which we all can come to as well. But the biggest issue I get, Dad has just died in Johannesburg, he's got a son in London, he's got a daughter in Sydney, and he's got another daughter in Paris. Now he's got all these assets in South Africa. How do we get the assets to the kids overseas? And then the kids, of course, are fighting as well. And then it's not simple. It's just simply not a simple issue. So there's a SARB circular from May 2021. And SARB, again, with all respect to SARB, they really wanted to make it simpler. And in their circular, they tried to set out a set of rules to make it easier to get these assets offshore to these beneficiaries abroad. But I can promise you, you can read that circular, and it is difficult to understand. And we've got a group of people called at Asisa, which is a group of insurance companies, and we've got a legal group, which is fascinating. You must come and join us. Every 3 months we meet and we talk about insurance tax law, the highlight of all of our year. And none of us could understand the circular, and it's contradictory, and it's just not simple. Forex is not simple. We know that. As much as they try to make it simple, and they are trying to make it simpler, it's just not simple. So if you've got a kid abroad and he's trying to get the money out, or she, are they tax resident in South Africa? Do they have their allowances still? Because if you're not tax resident, you don't get the 1 million allowance.
Ooh.
That's something what the SARB circular says.
Okay.
So you've got to try and get the 10 million allowance, you've got to apply for a tax clearance certificate, but then, Johnny's been living in London for 20 years, he hasn't got a tax number, he's not tax resident here anymore. So it's just messy. And then what we would do at the insurance company level, we will say, Dad had a life policy here, great, we'll pay the money to a local South African bank account, and then you go sort it out with SARB and get the money out, and good luck. Now, that's just the reality of it. But if you've got your dad had a foreign life policy, the dollar life, or a foreign endowment wrapper, there's no issue because it's already offshore, it's an offshore product, the allowances have been used by Dad, we'll pay the money out to a foreign bank account anywhere in the world.
Okay, so
and that's South Africans don't realise the problem.
And that dollar life, I can, to your point, and it's nice and cheap because there's no assets in it while you're alive. You pass, money then flows into it, which will be in a foreign currency. It's already offshore. I can use that to pay the profits on the flat that I have to sell, but I can also leave it to my heirs.
Exactly. And we pay, as I say, to a foreign bank account anywhere in the world, so the heirs don't have to go through the Forex issue when Dad dies, because the money is already offshore.
And they don't have to phone SARS and get reference numbers and other bits
exactly,
and pieces.
And
with credit, SARS is way better, but SARS is, tax is never fun anywhere in the world. Minors as beneficiaries, you mentioned that. Is that a further complication?
So it is, because now the first thing is a minor, as you'll know in terms of Forex law, can't actually invest offshore. It's one of the quirks of Forex. You have to be 18.
Of course.
You have to be 18 or over to invest offshore. So even that minor gets that 200,000 Rand allowance, that's to travel. And the minor has to bring the money back when they finish traveling. They can't invest it. So it's the first problem. Now, Dad has got this foreign life policy, and he's got his minor kid, Johnny, who's 5. Now, what does he do? Who does he make the beneficiary on his life policy? Don't make Johnny, because as a 5-year-old, I have it every month where Dad has died and we've got a 5-year-old who's got a couple of million Rand due to him, and who do we pay? And again, there you've got to look at the foreign trust option. If you want to benefit a foreign beneficiary who's a minor, or even a South African who's a minor and there's offshore assets, you must use a foreign trust. You can't have a local minor with foreign bank accounts and foreign investments. It just doesn't work. We've had one case where this minor was a 5-year-old, very lucky minor, granny died in London, left him £1 million. Now, we had to speak to the Reserve Bank because we didn't know what to do because he's under 18, and the Reserve Bank said because it's an inheritance, he could keep the money there and it could be invested. But that's the exception. As a general rule, a 5-year-old can't invest offshore. Obviously, he can take a Rand-based local investment in Rands with offshore exposure, but he can't go directly offshore.
So to wrap, because we're hitting the time limit, in terms of, and let's break it into the two parts. The first part is we want offshore assets, but we want to keep it simple, particularly from a tax perspective. We want to keep it, our tax returns that we have to do every year, quite simple, because we don't want that complexity around that. And that then is that offshore endowment. In your case, it's Mauritius. It is properly offshore. It actually has some tax benefits for me, and then I can leave either as to wrap it up and pay out, or to pro rata give it to my potential heirs, and they're now
the policy itself can move over to your beneficiaries.
And that's a nice, simple, clean way of putting all of that together. The more complex part, perhaps, is that either if you want to bequeath money to offshore individuals or the like, or you perhaps need to clean up an estate in France or Belgium or Egypt or somewhere, is a dollar life policy, which, if I understand correctly, is unique to Discovery.
Yeah, so that's the one thing. I mean, everyone does an offshore endowment wrapper, that everyone in the dog does, but the offshore life policy in dollars is unique to us, our dollar life policy at the moment. We're the only South African insurer that does it. Of course, the offshore insurers that you can go to.
Sure.
But I mean, I must be a bit arrogant here, Simon. The South African insurance industry is streets ahead of most of other countries in the world. It really is, and not just Discovery, all the South African insurers. Our products that we bring out, our life policies, our endowments, are really a lot more advanced. You go to the UK and you buy life cover, and you'll get term insurance, which ends at 65. You'll get very basic disability, whereas all our life insurance companies offer whole of life cover, very complex disability, severe illness, and all the other bells and whistles as well, with vitality and all those good things. So, I mean, the South African insurance wrappers, offshore and local, life cover and endowment are really very, very advanced products.
Our financial services industry locally is absolutely world class. I mean, we're seeing American banks fail. We're seeing European banks, 150-odd European banks not make it. We're going to leave it there for today. Hilary Joffe, Head of Legal and Tax Marketing at Discovery Invest. Hilary, I really appreciate, Harry Joffe. Harry, really appreciate the time. The key thing here is that, as I said right up front in this presentation, yes, we're taking money offshore. Of course we should, because South Africa is such a small part of the global economy. Offshore needs to be a significant part of our environment. But we need to do it with thought. We need to do it with intention. We can't just say, well, this is easy. I can literally these days click, and I've got cash offshore. That's great, but there are implications. There are tax implications. They can be resolved, but they're complex, and there are real implications in your estate when ultimately you pass. And remember, the only two certainties in life are death and taxes. So if you're taking money offshore, stop and pause first and be a little bit smart about how we're doing it. Harry Joffe, Head Legal, Tax Marketing, Discovery Invest. Appreciate the time. Ladies and gents, we'll be back after a short break.